Hey guys, welcome back. Patrick here. Is it just me or the stock market is completely nuts right now? You have Dogecoin being pumped to above 40 cents in the past week. Meanwhile, you have SPACs going under $10. This is very funny to me. Don't get me wrong. If you lost money in the past month, I'm not making fun of you. But what I'm saying is that the market is totally misunderstanding where the value is right now. So that's what I want to talk about today. You have SPACs, which I've been extremely critical of over the past month or two, right? The revenue projections are too high, the valuations are too high, all the empty promises, but then they've been beaten down so much that we are at a point where you have screaming buys that are probably the best investments in the stock market, in my opinion. So that's what I want us to talk about. Let's start. Alright friends, over the past 3 months, SPACs have been getting absolutely destroyed. You probably feel this in your portfolio, and so do I, because my stock portfolio has a lot of SPACs in it. So outside of the stock market, I have real estate, I have mortgages, I have collectibles, so I have a lot of diversification when it comes to my entire portfolio. But when it comes to the stock market, I have a lot of SPACs, right? So I have been feeling it the same way you have, and when they're all going down and they're not kind of balancing each other, that's when you're going to see decent losses in your portfolio. I mean, if nothing is going up, you can't make money. So we had a lot of different theories on why this is happening. And when everything was going down, it made sense to blame the interest rates going up and the fear of inflation, the yield going down, and then we could look at the oil prices were going up. All of those were good indicators that something was wrong, right? And the future cash flow from these growth stocks was discounted by the market. They were not given the same premium that they did in 2020. But now, over the past couple of weeks, we had this shift, right? Where all these tech stocks have started to stabilize and even go up. I invested in Facebook not too long ago. I made a post in the community tab. If you guys want to follow, sometimes I do post in there, right? Where I mentioned I bought into Facebook again. So I believe it was at 261. Well, now it's above 300, right? So those have recovered. Meanwhile, the SPACs have continued to crash. Well, why is that? There has been a lot of different theories on why. One of them is that right now the SEC is starting to be a little bit more aggressive against SPACs, right? We're going to have a new chairman. They're going to look into them. They don't like the projections. They're going to be maybe considered the warrants. They're going to be considered liabilities instead of assets. So yeah, that creates a lot of uncertainty in the market when it comes to SPACs. But still, it just does not make sense. When you look at some of them, and you're going to see screaming buys right now. Opportunities that were not there a couple weeks ago. So the market has capitulated on them right now, and I've been really trying to figure out well, why is this? I mean, I've talked about it with my friends, and then my friend Tom Cruise actually got the best answer. I actually recorded it while we were on the phone. Listen to this.
Show me the money!
That's pretty aggressive, Tom. What do you mean?
Show me the money!
Well, I think that what Tom is saying is it's time for these companies to really put up or shut up. Over the past year, we had a lot of over-promising and under-delivering. Think about Canoe, for example, Go EV, a company that I've talked many times about on the channel, and I liked a lot about this company, especially the skateboard being modular and you can do a lot of things with it. Well, over the past 3 months, they've scrapped their entire business model and are replacing the management team. So it's not exactly the same company that we invested into over the past several months, right? Then you have other companies that are failing on their financial projections. I'm thinking of XL Fleet, there's Romeo Power, companies like those. So in the words of Tom Cruise, show me the damn money, right? Now you have to actually deliver on these promises. So the thing is that the market is watching it from a 10,000 foot view, right? They're giving up on the entire SPAC market, even though we are following it a lot more closely than they are. And we can spot those pockets of strength in the SPAC land, right? So there are still SPACs that are great, but they're all lumped in together and they're all liquidated. The bottom is falling out. No company is a better example of this than Lightning eMotors, which is why I put them in the thumbnail. Now, who's selling this stock under $10? Do you hate money? Let's shift to my computer. About a month ago, I made a video called GIK Lightning eMotors Price Target, where I gave this company a price target of $18 at the merger. So I had all of the greatest intentions in the world, but of course I was wrong with this one. I don't think it's going to make it. So my theory, my bullish thesis for this company is that so far 100% of the electric vehicle SPACs have been successful thus far, right? So they've all gone above $20, whether we're talking about Canoe, Lordstown, you have Fisker, all of them were successful to a degree. So at the time, there was no real indication that the market was going to be this rough on the SPACs. I mean, we knew there were some warning signs, but not to this degree where they would crash under $10. I don't believe anyone could have predicted this was going to happen. Not me, not anyone else. But a lot of viewers were a little upset, and I understand that fully, when a few days later, or a week later, I made a video saying, GIK, I sold everything. So yeah, that might seem a little disingenuous, but when you look at the chart, I mean, we all knew that it had been in a big downtrend, and when there was this spike in price right here, was a great opportunity for me to like exit part of my position because I had a lot of warrants in this company. It was a decent part of my portfolio. So I exited that successfully, knowing that I could later on actually buy them cheaper because the downtrend was so severe. But now, a month later, we are at 903. Look at this red candle. This is very, very bad. On Friday was the last day for you to redeem your shares for a fraction of the money that the company has in trust, which is usually a little over $10, which is what creates that $10 floor. Now that the $10 floor is gone, people are panicking and are panic selling. And now the share price is at 903. But when you look at 903, that is less than what they were underwritten at. Is there something wrong with this company? And we'll do the same with other SPACs, right? But is there something wrong with this company? Is it a fraud? Do they have fake orders, like Lordstown maybe? Or is it a fake car rolling down the hill like Nikola? Or are they going to change their business model like Canoe? No, that's the thing, is that when you look at this company, there's no red flags really. They have a lot of new orders that they keep announcing, right? And just Friday, if you guys want to watch it, I'll put it in the description. Tim Reeser, the CEO of the company, was in another roundtable where they're talking about like the company and they're answering questions. And they talk about the supply chain, which is very important right now with, you know, a lot of companies like Romeo Power are blaming the supply chain for them not meeting the projections. So there's no real red flags. I listened intently on what he was going to say, and I didn't really pick up on anything. More than that, even, their orders are audited by a third-party company, meaning that when they have orders, they have another company that actually verifies that they are real numbers before they publish them. So that should give consumers, like investors, a little bit more confidence in the company. So why is the company beat up so much? Is it the valuation? No, the valuation for the company right now is $571 million. Think about that. It's an electric vehicle company. Everyone loves this industry and thinks it's going to be multi-billion-dollar market. They're at $571 million. You would think that this is a startup in someone's garage, right? 2021 revenue, which is almost guaranteed, right? They already said that they have those orders locked in. 63 million. This gives them a price to sale ratio of 9.06. This is considered a steal in the market. You compare them to like any of their other growth stocks, it's going to be very, very undervalued. So the companies in the past couple of months that were recovery plays and value plays, well, this is one. So why is it at 906? That just tells me that the market has given up on all of them, regardless of their qualities. This company, if you look at it, I made a video recently about warrants, and it meets all the criteria of a company that will generate hundreds of percents of profits fairly easily, in my opinion, right? It's not a guaranteed or anything, but if you look at it, are the warrants under 2.5? Yes. Is it an established company with revenues? Not massive company, but yeah, they are established. They have products, they have customers. Like, for example, Van Hool, ABC coaches, right? They're actually doing more orders. They ordered 200 recently, motor coaches. These are not small vehicles. Then you have realistic projections. I think so. No redemption under 18. And I think it's going to make it to $15 within 5 years very easily. So you look at this company, right? The break-even price on the warrants at $13.20. If it just makes it to $15, that's a 105% return on my investment with the warrants at $1.70. So this is the type of thing that I'm looking at personally. I mean, I'm going to show you other SPACs that I'm looking into, but right now we have shifted from they're so overpriced and they overpromise and underdeliver to where just in a few weeks now we're at a point where they make sense again and they are super undervalued. Let's look at some of the other SPACs that I feel are undervalued. People ask me all the time my opinion on this or that SPAC. Well, here it is. I'm going to go through the list of the ones that I follow. I'm going to give you my opinion and if I like the price. So for the SPACs that have already merged, the ones that I'm tracking actively, you have XL Fleet, View, Triteras. I'm not interested for various reasons. Like XL Fleet can't meet its projections, so the company is going to be overvalued at this time. Space Mobile, though, is extremely interesting to me at 781. So think about it. People bid this company up to $25 before. There is a lot of interest in their technology. They have a lot of patents and all of that. It's not like there's a short report that came out saying that their patents are fake or their technology is fake or any of that, right? The only difference between now and a few months ago when people were in love with this company is that they were not included in Cathie Wood's Space ETF yet. Doesn't mean that they won't be in the future. So this is a high risk, high reward play, but at 781, the risk versus reward is a lot better than when the company was at 25. This is the one that I would like to have a little bit of exposure to. Canoe at 821, I'm not interested until like they actually show me the money because this company has a lot of uncertainty around it. Right? They're not going to start producing their pickup and delivery van until 2023, I believe. So I like a lot about the company, right? Their pickup looks great, but until they start producing them, because of all the uncertainty, I'm not going to be bidding on it. For Romeo Power, Ouster, Clover Health, I mean, Clover Health I still think is a scam. I'm not interested. The other ones, I'm not as familiar with them. Ouster, never really looked into it. Ileon at 886 is very interesting. Once again, this company had been at $58 before. Now it's less than 1/6 of the price. So remember all of the memes about Thomas Healy being the savior and this company's technology is going to be amazing. Well, if you liked it then, you certainly should like it now that they made 6 months worth of progress and their technology is getting better and better. So at 886, it's a no-brainer. I would want a little bit of exposure to it. Just my opinion. Remember, this is just my opinion and what I'm investing in. It's not a recommendations. I'm not your financial advisor. So Lordstown, I'm not touching it. Finance of America 1006, I still think is undervalued. Now remember, the mortgage companies are being held down and shorted heavily, right? So it's going to take a long time for these companies to go up. But over time, this is the type of company that I would like in my long-term safe portfolio. This company is great. They're going to grow over time. Ava, Desktop Metal at 1270, I think is a great play. PaySafe finally went under $15 where they had been fairly stable for a long time. Now at $13.49, it's getting very interesting. Bill Foley will likely help this company like turn around. This is another company that I like. Golden Nugget Online has been going up and down, but right now it's settled at $14.70. Again, company that I feel is undervalued at this price. But then you have my favorite, of course, Tattooed Chef. I started talking about this company literally when they announced the merger. Right now it's at $18.71. This week it actually went under $18, and they are on a downtrend, so it can keep going down. But I think that this company is undervalued. I mean, at a $1.5 billion valuation, the risk versus reward is skewed towards the investors. Now there's more and more YouTubers that are talking about this company, right, and hyping it up. So over time, it's going to find its base of investors. And think about it, you can literally go to your Sam's Club or your Costco or Target now, and you can see the displays. You can see if people are buying it or not. So this is not the company that, actually, there was a short report before, right? And they were trying to attack this company, but it's going through it fine. The sales are fine. Over the next quarters, we're going to see the growth of the company. Again, it's a case of show me the money. That's why the SPACs don't have a lot of institutional support right now. But as the numbers start to come out, as the SPACs prove themselves, you are going to build a much better base of investors that are going to be holding them long term. So all that to say, Tattooed Chef at $18. I bought more over the past few weeks and I'm going to keep buying. I like them. So when it comes to the pre-merger SPACs, I ordered them by share price. So GIK, Lightning eMotors, I talked about them. I want to add more to my position, right? Right now, I only have 1,000 warrants. It's not enough for this company. When they were going down, right, when it was at $13 and I knew that they were going down, I sold a lot of my position. But now that, I mean, the company is too cheap, so now they're very attractive, and I want to buy more of them. Play Studios at $9.90, I like it. Apex Clearing, $9.91, I'm not interested. Apex Clearing, I feel like in 2020, there was that huge like boom for stockbrokers and of course clearing houses, and Apex Clearing like did okay, but they didn't grow as much as I would have wanted them to. So I'm not interested in Apex Clearing for now. You have SNPR, of course, I like it a lot. It's my favorite charging station play at 10.01. I still think that's good. I mean, I feel like that industry is a little risky. There's too much competition, but if I was to invest in a charging station company right now, I would do SNPR at this point, personally. Black Sky and Indie Semiconductor are interesting. I have warrants of Indie. Then you have Rocket Labs, company that I bought more in the past few weeks and will continue to buy. This is a company that I like long term, very speculative again, but if you want to invest in space, I feel like Rocket Labs is the best choice in my opinion, since SpaceX is not available. So you have Microvast, another company that has a lot of uncertainty around it because of the Chinese connection, but at 11.02, great risk versus reward in my opinion. Other than that, like, there's some other ones, like of course SoFi at 1632. I'm worried about the 30% short. I've talked about it in a previous video, but if this company can actually stabilize and end up like recovering after they attack it, I'm going to be all in on this one. This was my biggest position before. I lowered it. Now it's like my 5th position or 6th position. But in the future, I want this to be one of my bigger ones too. Really believe in this company long term. Speaking of which, if you want your $50 free by depositing $500 in the money account, link is in the description and in the comments as well. So guys, this is what's going on with the SPACs right now. Right? At some point in the past, yeah, there were a lot of theories about, it's the interest rates, it's this or that. Right now, there's just nothing rational to explain these low prices. Lightning eMotors is the best example of this, right? You cannot reconstruct a case where you could say this company is overvalued or it's a scam, at least not yet, right? At some point, we might be proven wrong, but it just shows me that the market right now is not respecting the SPACs, and all of them are getting attacked for no reason. So now, there's been that huge pullback. A lot of them are almost at the bottom, right? So there's not much more drop to come in the future. Are they going to drop another $1, another $2? Yeah, possibly. But I doubt we're going to see those 40-50% drops because they already happened. So that's why I like the SPACs now a lot better than I did just 3-4 weeks ago, where they were in a clear downtrend. And now I'm excited about them again. So this is what I'm going to do. I showed you a few SPACs I'm really interested in and want to add more to my position. You can look in the community tab. I've posted some in the past. So I hope you guys enjoyed the video, and I'll see you in the next one.